44 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, I'm going to do a brief setup for the week ahead. This is going to be a big one. We've got inflation numbers coming out, so that's going to be the centerpiece of the entire process outside of after Monday when it's the eclipse. So let's get into tonight's video. Welcome, everyone. I guess maybe you thought I wasn't going to show up. Sorry for the late start. We've got an interesting week ahead of us. We just went through an interesting week, and we saw employment numbers continue to baffle everyone. Well, it's not that hard to figure out. And it's, as I've been mentioning over the course of actually, I think 2 Fed meetings ago, Powell actually exposed to us exactly what's going on in the economy and why the labor numbers continue to baffle us. We've got all kinds of new employees flowing across our southern border, and that's becoming more and more that immigration, Powell said, this is a quote, actual quote, immigration is keeping the jobs market going. And we saw, JOLTS come out. All of these metrics are fairly stable, even though they're down slightly. We're seeing continuing claims. Now, those numbers are just, those metrics continue to be really good, no pun intended there. But we're really looking at this market that doesn't want to go away. And I can tell you, I'll preface this a little bit in tonight's video. I'll cover the database over the weekend. I was all excited like a little kid on Christmas morning. Can't wait to open the packages. When the run went off on Friday, didn't get anything at all like I thought we might get. I was expecting some reasonable amount of selling to come in to the intermediate database, and we didn't get that. Very unfortunate. I really wanted it, but you don't get what you want all the time. And I just want to preface this. This is going to be a pretty quick video tonight. I have some time constraints on me. I just want to get things set up, so we'll go through probably S&P. We'll touch on S&P and NASDAQ and interest rates, maybe a really quick look at Bitcoin, but I'm just going to go through this very quickly. But we're really, as we come into this week, let's talk a little bit about the economics coming in this week. Got CPI coming in. Most expectations 0.4 on core, 0.3. Same thing with PPI, that's on Wednesday. Same thing on PPI on Thursday. The other metrics on Thursday are typical continuing claims and claims. It's a fairly typical week. But after the week that we just had, I mean, it's hard to find a soft spot in the economy. And you could argue with what I just said about the immigration is that real jobs maybe are not being grown like they're made out to look like, right? So maybe a lot of these secondary jobs, however they're filling, how they're doing these surveys is really interesting. And I usually hate sports that have judges. I like boxing, but I like to see a knockout so there's no doubt who won, right? Well, in this case, anytime you're doing surveys, anything like that, the numbers get real fuzzy. One of my favorite books of all time, I think it was written in around 1955 or so, is How to Lie Through Statistics. And if you haven't seen that, it's an old book. It's still used in most colleges as basically the Bible for doing surveys and different types of elements. We see it all the time in our society where the sampling is everything. So you sample the people, you can get any answer you want. So the statistics are a lot of times lies, and it's the same thing with government reports, all of these things. My argument, though, and back to government reports, is those are the numbers we get to trade off. That's the numbers everybody looks at. And you could argue all day that they're phony, fixed, cooked, doesn't matter. if the markets are still responding to these reports as they come out, then that's what's important. And that's why we pay attention to them until they stop responding. When they come out and nothing happens and no one cares, then we'll know that we'll stop following these numbers. But like I said, this week we got CPI, PPI, that's going to be the focus. And let's just talk a little bit about this. It was really interesting. The talking heads from the Fed were out in big time on Thursday and Friday last week. And what we were seeing from those folks were, basically, we're a little still. One guy is saying we're really worried about inflation coming back. Another one saying, "Oh, I'm not worried about that at all. I'm worried about other things." And I've been arguing on this channel that I thought maybe, just maybe, the Fed had already started tapering the sales of securities. Well, based on the action in the 10-year, that's kind of hard to swallow. I don't see that that's got a lot of merit, and I've been saying that on Substack as well as on the channel here. So once again, if you want the microanalysis in depth, get the Substack. There's a 7-day free trial. You can go to kendallreport.com/newsletter, or you can go to kendallreport.substack.com. And it's worth a read. I think most of the time it's between 4 and 8, 10 minutes tops if I get really wordy. So it's a really quick, brief overview of what I do on my macro, and that comes out every day. So there's one for Monday through Friday. So back to analysis. It's interesting because what I'm seeing here from the standpoint of the metrics that are coming out, this rosy picture continues to be painted. Now, I see a lot of folks are starting to challenge these numbers as they're not real. Like I said, if we start to see that the response is much less than what we'd expect it to be, then we can start to discredit these numbers. Until we start to see that, I would stick with they're real until they're not. Okay. Excuse me. But yeah, so I'm just looking at my notes here. I think that covers pretty much everything I wanted to say. Just know we're not sure what's real or what's not real, but this is my litmus test is if we're seeing reaction to the reports when they come out, if they're better, worse, whatever, we are seeing that, then the numbers are still valid. When we start seeing that they don't do that, then we can start to go, these are bogus, and we move on and look for other metrics. But the algorithms and the trading algorithms and things that are out there love these numbers. And then you get into this stampede mode, which I've talked to you a lot about. So let's do this. So the rest of this, I'm 8 minutes in. What we'll do here is I'll go through the WaveTech Database. We'll talk a bit about that. Then I'm just going to go through S&P setup, basic setup there, NASDAQ, and then we'll touch interest rates and probably Bitcoin. So we'll do 4 markets. And just know I'll cover all this stuff in detail on Substack tonight as far as what my expectations are, and I'll draw a little more conclusions. But the realities is tomorrow is actually going to be interesting, right? What's going to happen before I move on, what's going to happen with this eclipse? I can tell you we have tons of family in Texas, and they have shut down access to Kerrville, which is off of I-10, right outside of San Antonio. They're shutting access off a lot of these small towns. That's how many people are out there camping out and looking to see the darkness and see the eclipse on tomorrow. And so it's pretty bizarre what's going on. It really is from my viewpoint. And I get it's been painted up as a once-in-a-lifetime deal. So anyway, I think it's interesting. I don't know if we'll see. It'll be interesting to see when this is happening during market hours tomorrow, if there's what happens. Anyway, let's get on to the WaveTech database. All right, so we'll start off with the dailies. I'll go backwards a little bit. As I've been telling you, that my expectations have been that we're going to see a fair amount of selling. I was thinking maybe 1,000, 2,000 symbols on the intermediate database. So we'll start here with the short term. It's at 33.49. We did see 195 buys, 743 sells. Not a lot here to look at. Let me go to the all stats page here, just so you can see the rotation. Not a lot going on there. We go down to the sectors. We have seen several sectors, and I talked about this. We saw two big tranches of orders coming out last week, and those orders, I think there was a 3,700 and a 4,200 tranche of sell orders. Now we've got 15,000 items in the database, so a lot of liquidation. But if we look at the sector rotation happen, technology, services, healthcare, consumer cyclical, and capital goods were sold out last week. We did have all 12 of them long, and then what's left, and most of those were profit taking, by the way. I know just the fact that we're selling doesn't mean we're selling at a loss. About 65 plus, maybe as high as 72% of these trades that were liquidated last week were profit taking. We did see a little bit of rotation back in, but now we're just kind of stabilized here on the short term. Like I said, we have 195 new buys, 743. So still a minor liquidation going on here. We're at 32% bullish at the moment. So nothing drastic. My perception of what we were going to see when Fridays run. So on every Friday night after the close, we collect all the data for markets, all 15,000 plus symbols. We run the models on intermediate, and then we report out any buy sells that happen there. So let's go over to the intermediate and take a look at that. It's still at 87.68. We're, I believe, 88.04, something like that. So we just backed up a little bit. 176 buys versus 407 sells. So we did get some selling, but not a material amount. My best guess was, based on the short-term database dropping like it did, that there'd be an immediate effect just because we're pushing this 88 percentile bullish range. And we didn't get that at all. And that's the beauty of having the database and being able to track all of these symbols very accurately as far as the trend expectation goes. And as I've told you folks over and over, is that this database isn't how many stocks are above a 200-day moving average or something like that. That's pretty low-level analysis. But what this is looking at over 600 rules that are firing in our models to determine whether the current trend is still valid. And I'll take you to another page here real quick. We come over here to the stats page, and right now I'm looking at this column over here. I'll just highlight the top of the column so you can see it's right above me. I wish there was a way to zoom in here. I don't know how to do that on this software. But the average days on any trade that comes in here is 203. We're looking at right now about 0.54, about 54% of the duration or the holding period. So what's interesting about using this database and you folks having a way to see this is this tells us every symbol in our database has a map. It tells us how many times we trade, what the profitability is, what's the average holding period, what's the mean, a bunch of statistics that comes out, gives us ability which to judge where we are in the market cycle from a trending viewpoint on thousands of symbols, tens of thousands of symbols. So it's very unique from that standpoint. And this is what led us, if you think about it, this stuff all rotated in coming out of October lows, and it's been projecting forward for a while. Here we are in April, and we're still long. Markets are basically near their tops, within a few percent of the all-time highs, and we're still seeing very high participation levels from a bullish percent level. like I was hoping, as I said, for more attrition from that standpoint. I'm not really disappointed, but I thought we were at the point where we start to see some rotation. But I still think we are close to that number. We'll see how this week plays out and see if we can get a feel. But I do think we'll see this back up. I'm still expecting a move back to around 78% bullish, 72% bullish. But let me just talk just real quickly, since I said that, what this means. I'm just looking at my timing here. Okay, good, 15 minutes. So as what we're expecting here in this process is once we start to back up, just the fact that it's doing some selling, that's actually a refreshing of the database. And that's what we're seeing on a short-term basis. Typically, I like to see these database stay above 42%. In this case, we're at 32% on the short term, which just tells us there is quite a few stocks that are not in trend mode on a short-term basis. Intermediate term is still in place. Sometimes it'll take 2 or 3 weeks to start to see these things. And you'll see when we go through the S&P here in just a minute that when we look at the weekly, there are being forecasts by the algorithms that there is some weaker prices, at least to test some of these key support levels. Now, we saw a bunch of bouncing around last week, and we did get down to some interesting support levels, but none of the more extreme and material levels that we would expect to cause a difference. So let's go ahead and take a look at the S&P. All right, well, I'll start off here. I actually have one of our trade signals on here. It's interesting that we got a short over here the other day, and this is the market flow indicator. And those of you that have the indicators, I'll show you what my settings are here real quick. As the settings are come all the way down to the bottom are 8 and 5 for this current cycle. This should be a pretty good cycle. All the marks look pretty good as far as the buy and sells goes. Participated very similar to our WaveTech models. And so I brought this up. Let's go. Let me go into more depth. There's just a couple indicators here. So let's go over here and let's go to the futures and take a look at the daily. We got a little bit of a positive tone as we're coming in to tonight. We've got 6 handles up 0.11. You see the market grid has turned up here. Let me bring this up a little so you can see this. Market grid is turned up. What we're likely to do here from a market grid standpoint is start to see potential to get up to around the 52.91 level, and then there's big numbers at 53.12 and 53.30 just to stay within the context here. Now we look at the algos on a daily basis. They're basically flat. PPM2 is still fading. PPM3, there becomes a better than even chance now. Otherwise, a little bit more than a 50% probability for the market to actually come down toward this 40-period moving average. I've been talking about this number, 5150, something like that. It doesn't look more drastic than that. But let's go over to the weekly chart here. Now, weekly chart, I believe we did get an outside reversal. We did get an outside reversal last week, and this will be fairly significant to watch. Now, if you've been around the channel, you know about the 3-bar trade. This would suggest there's a couple things to watch for as you go through this week. Number one will be the low of last week was 51.91, and the high was 53.33. So that was actually a new high, and now we're coming back in. So here's the criteria for this. If we do not make a new high this week, but we close lower than where we closed, the close on Friday was 52.57. 52.53. So expect if we close below that, but we also have to make a lower low. So the number I just mentioned, 51.80, something like that needs to print. If we get that print, we close lower on Friday, then we're probably going to get 2, maybe 3 more weeks down. And the potential for that would be somewhere in between this 21-week moving average and the 10. Now, the 10-period moving average has a fair amount of upward slope in the angle of attack. So that just tells us that 51.79, the number I just talked about, that should be reasonable support. If we go down and print that number and then close lower on the week, that's all we'll need. And what it's being forecast here, if you look at the weekly algos here, is what they're forecasting is that we're going to see an attrition of the upward momentum, and we should start to set up maybe a larger corrective phase, something of that sort. It doesn't appear that we're setting in a place where we're going to see some big drastic reversal move to the upside. We're actually starting to see way more negative elements around, at least around the WaveTech environment, just what I told you about the short-term models being down at 32%. We're seeing negatives on the algos, all those things. So we're looking at a slight bias to the downside, but still looking at this range I've been throwing out there between 51.50 and 53.50, this 200-point range. The way that the market's trading, especially since we have major news coming out that markets are paying attention to, the CPI and PPI this week, we're likely to see kicked up volatility again. But the market grid is turned down. The focus is going to be all around that 51.80 level. So if we do print that, that's enough to trigger that 3-bar trade. Now this is a bar on a weekly chart, so it becomes a bit more significant if we get that. So watch these numbers really close. All right, so we'll go to NASDAQ. NASDAQ has a slightly different pattern. We do not have the outside reversal. We've seen this many times, and I keep wanting to actually look into something, which is if the NASDAQ doesn't get the same pattern that the S&P, does that invalidate it? Is there some validation between the indices? I don't know that at this time, but I'm going to take the time. I'm actually making a note to myself because that's something I've never validated. It'd be interesting because there's a lot of interest, especially S&P and the NASDAQ. There's a lot of common stocks that exist, especially at the top end of the index. So on Tuesday when we do all the stocks, maybe we can get into talking about some of the rotations going on. Just remember, tomorrow I'll go through more in depth. It's what I call Macro Monday, so we'll go into more details from a macro standpoint. Once again, Substack's micro day-to-day analysis. So let's go ahead and look at the values here, and we did print down to some of the values. I know I've been talking about this 10-period moving average here, and the number right now is 18,214. There's some very good support right at 18,000. Below that, we could go down as far as 17,600 on this index, which will put us pretty close to the 21-week moving average. So there's definitely some downside. You look at the algos on the chart up here. The dotted lines are the forecasts. You're seeing that the forecast is showing loss of momentum. The fact that they're going down doesn't mean the market has to go down, but typically when we start to get, we've already crossed over the first derivative on PPM1, we cross over this green line, which isn't going to happen this week, I don't believe. It'll probably be next week. Then that tells us we have a test of that 21 value, which is that's 17,500 right now to round that off. That number is still rising slightly, but that would be the signal next week, not now. So, but the same general configuration is set up here on the NASDAQ. All right, this market definitely deserves some talking about. I went through an awful lot of discussion over a couple weeks ago. I went through a big thing on Substack. I thought we were going to see rates just stay under that 433 number. That's no longer a thing. We printed up to 4.42. What's interesting, if I look at this, we closed right on, let me bring this number over on the far side here. The number last week, 4.367, we printed right on that. This is weekly. We just above that, so we got an RTXL weekly. Now I'm going to go over to the daily chart, and this was actually interesting as well, is the number we closed right on the exact number. If look over at the market grid on Friday, 4.378 was RXT. We actually printed up to 4.40, 0.04, and then the close was 4.378, right on the RTX. So not above it, not below it, right on it. So what I would see from that is looking at the weekly RTXL, we're probably going to come back in. But the thing I want to talk about here is kind of the elephant in the room. There's some new fib targets to the upside, and we have inflation coming out this week. We have a number of elements that are definitely going to affect the Treasury market. And my theory, as I said, I'm kind of throwing out some of my theories that the Fed was doing tapering on QT. Maybe they have, but there's no material effect. But the thing that is happening, there's still a lot of selling of bonds going on. Of course, we have I'll do it tomorrow, actually. We'll cover the Dow yen. The Japanese are the only ones right now that are in a tightening cycle, if you will. It's not a big one, but they've changed. They've been opposite of everyone for a while now, so this isn't anything new. So as everybody else was tightening, they were staying loose. Now there's a talk about maybe loosening here in the States and the Western markets, and Japan is looking at actually cranking things up a little bit, mainly to support their currency. So this was a story last year, and it became a fairly big story. We printed up to some, I don't have the yen up, but I'll do this tomorrow. But going back to the treasuries here, this is likely to be a place to watch to see if any kind of material things are continuing to happen from that standpoint. So my expectation is with the RTXL, we should come back in a little bit. There's tons of support. If we look at the numbers down at around 427, 425 is a huge support number. So I don't think we get below that at all, but that is likely to be something to watch at least for the next several days. The algos are suggesting as we come into, let me see what day this is, as we come into the end of the week, that this is on a daily basis that we're going to see some weaker interest rates. Otherwise, that we're going to get a little mini rally in the bonds, and we'll see how that sets up. But that's what's coming in actually over the next couple of days. That looks like where we're probably going to end up. So I'm going to cover Bitcoin. Tomorrow I will do gold. It's still doing, it's got a significant rally going on. And so I'll do gold tomorrow, and probably the Dow, those will make good things to cover tomorrow in the Macro Monday, and we'll probably do a much longer stream. So I'm right at about 30 minutes right now, so we'll be done here in just a couple minutes. So one of the things that's happening here I've been showing this, I'm going to crank this up a little bit, is this indicator right here is PPM1. it's right against a downward movement as far as the second derivative go. It looks like it wants to turn down. So what it's telling us is that we're probably going to print up toward the RTX level on Bitcoin. I'll give you the numbers: 71,052, somewhere around there. I would look for some rejection off of there and probably coming back underneath the moving average values, which right now 69. The target would be 69,100. I'm rounding some numbers off to 68,800. So that should be where we come back into. And I think ultimately, I've been talking about us just getting locked into this. Let me blow this up. Getting locked into this area right here. Let me draw this in quickly. This little area right here, markets are likely to stay in this range. We get into this wedge, and then if we go back to the algos, you can see what's being forecasted. This is telling us that we're probably going to get rejected. We're going to test this 40-period moving average, which is 63,000, we'll just call it. Okay, so that is likely we're going to come back in this range. We'll probably stay within the market grid. As you can see, even the adherence to the numbers in market grid on Bitcoin, we very seldom get outside of the bounds of this market grid. So we're right up at that higher end of that level here. And I believe that there will be an update here. In fact, I know there will be. This bar will close out at midnight Eastern time. So literally after midnight, we should be seeing to come back into this pattern that I'm talking about here. Okay, folks, that's going to do it for tonight's video. I want to keep this to 30 minutes. Tomorrow we'll go more in depth. We'll go into more of some macro elements that come in. Just remember, I should have this on the screen so you can see it. Substack, kendallreport.substack.com for the microanalysis. There is a 7-day free trial you can get, or you can go to kendallreport.com/newsletter. You can get the microanalysis there. And it comes out late. It probably comes out around 4 a.m. New York time. I'm somewhat of a night owl, so I stay up late and there's no one to bother me and I can focus, and I enjoy writing late at night. So that'll work for me. So yeah, that's funny. Eddie Money, no control. I like it. Anyway, I need to put that song up, right? Okay, so that'll do it for tonight. Appreciate everybody coming. Make sure you hit the like button, share these videos, subscribe, all the stuff, and definitely make sure you get the indicators. I've been going through these live trading, showing you some basic techniques and walking you through the thought process of trading E-minis anyway on Friday. So if you haven't seen that, go back and watch that video. And definitely, if you want the indicators, go to kendallreport.com/indicators. There's actually a new video on there. I think it's like a 45-minute presentation that you might want to watch through as well. So that's kind of a bonus that's on that link at this time. Anyway, folks, have a great day trading tomorrow. We'll see you tomorrow at 7 p.m.